Friday was a pretty bad day for semiconductor investors. Actually, it was a pretty bad day overall, but semiconductors specifically had quite a horrible day. Intel was down 2.4%, ASML down 3.3%, TSMC down 3.4%, Micron 4.6%, AMD 5.4%, Nvidia lost a whole Alibaba, it was down 10%, and ARM down 16.9%. And the biggest loser of the day was Supermicro, that was down 23.1%. Now, what exactly has happened? What's the reason behind all of that? We're going to have a look at that in just a second. I'm also going to have a look at the valuation metrics for Nvidia, AMD, Intel, and ARM, look at the charts as well, talk a little bit about TSMC's earnings report because I didn't do a video about that. So stay tuned for all that. If you enjoy this type of videos, leave it a thumbs up, subscribe if not, we'll really appreciate it. If you want to support me even further, do check out the link down in the description and in the pinned comment to get a top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. So SMCI, they came out with the announcement of the date where they will release their third quarter fiscal 2024 earnings. Now you might say, okay, big deal. Well, yes, I also didn't understand. I was like, okay, big deal. Everybody announces that. But usually SMCI pre-announces some of the results because the results are so good. This time, it did not do that. And so the market starts to speculate as to why that has happened. Is it because the results aren't as good as expected? Is it because of another reason? Why is that? The market doesn't like uncertainty. And so, bam, huge hit on the stock. Of course, the stock was already up, 200% or so year to date. So a lot of expectations are baked in. So not having that pre-announcement is maybe a bad sign. Plus, we've also seen some weakness in the overall semiconductor space in the last couple of weeks, whether it's fears from more restrictions with regards to China producing more chips, things going on with Taiwan, things going on in the Middle East, etc., etc. It certainly does not help. And so let's have a look at Nvidia, AMD, Intel, and ARM with regards to forward PE and then price earnings to growth. So right now, the most expensive one is ARM at 65 times. Of course, it is cheaper than the 5-year mean. There is no 5-year mean here since the company came public not so long ago, but the mean here was 72.8 times. By the way, remember the video I did about ARM saying that I wouldn't touch the company because it was way too expensive? Stock was above $120 or so. A couple of commenters were making fun. Oh, that didn't age well. Well, I guess now it has aged very, very well. Up next, we've got AMD at 40.8 times. That's actually above the 5-year mean of 37.5 times. Then we've got Nvidia at 30.6 times, which is below the 5-year mean of 41.6 times. Again, a company like Nvidia, which is expected to grow quite a lot still. 30.6 times forward PE, not that expensive at all. Intel has become cheaper now at 25.3 times. It's a bit more expensive than the 5-year mean at 18.8 times. But then if we look at price earnings to growth, which is in my opinion a bit better of a metric, we've got the cheapest one here of Nvidia, 0.87, then AMD 0.95, Intel just over 1, and then ARM, the most expensive one, 1.54. If you purely want to look at SMCI and then a competitor, for example, Dell, you can see that SMCI currently has a forward PE of 25.7 times, whereas Dell sits at 15.2 times. Both of them are more expensive than their 5-year mean. With regards to EV to EBITDA, SMCI at 17.4 times, Dell 9.2 times. Here, the same story again, and it goes on for price to sales and price to free cash flow. It's more expensive than the 5-year mean. Of course, it's now in an upcycle, so it gets a higher premium from the market. With regards to price to sales, SMCI sits at 2.2 times, whereas Dell 0.9 times. Again, Dell I still believe is a better pick. With regards to price earnings to growth, SMCI here at 0.51, whereas Dell is at 1.4. So SMCI here is expected to grow much more, which again begs the question, is this an overreaction being down 23% on the day, because the current estimates, the current expectations by the analysts for SMCI specifically is that they will grow sales for fiscal year 2024 105% year over year and EPS of 85% year over year. Then in the next fiscal year, sales growth of another 42.3% year over year and EPS growth of close to 41% year over year. So the analysts right now are still expecting that growth wave to continue. Of course, we know that sentiment can change quite quickly, which is also why we're seeing the average price target right now for Supermicro still sitting at $979, representing 37% upside from the price we're at today. Now, really quick touching on TSMC's report. So a couple of comments here. First, our business in the first quarter was impacted by smartphone seasonality, partially offset by continued HPC-related demand. Moving into second quarter 2024, we expect our business to be supported by strong demand for industry-leading 3 nanometers and 5 nanometers technology, partially offset by continued smartphone seasonality. If we look at the results, compare it to their guidance, revenue came higher, gross margin came close to the high end of the guidance, operating margin, high end of the guidance, 42% here, net profit margin at 38%, that's actually down 2.7 percentage points year over year and down 0.2 percentage points quarter over quarter. Now, if we look at the revenue per technology, you can see that 19% comes from 7 nanometers, 37% 5 nanometers, and 9% 3 nanometers. All the rest is from older technologies. Now, this is, of course, the magic of a foundry, right? You invest tons and tons of monies in those previous technologies. That doesn't mean that in a year or two that's going to end. No, you're still going to generate quite a lot of money, and then over time, all of those investments will become profitable. Now, as you can see here, 3 nanometers is quite new. Last quarter was a huge quarter for them. This quarter, a bit less, but I do still believe that 3 nanometers, the demand for that is just going to grow and grow and grow. As for revenue by platform, 46% came from HPC, 38% from smartphone, even though smartphone quarter over quarter was down 16%. With regards to Q2 guidance, they expect revenue to be between $19.6 to $20.4 billion, which is exceeding, I believe, the analyst estimates. Then gross profit margin to be between 51 and 53%, operating profit margin between 40 to 42%. TSM did lower its forecast for the 2024 overall semiconductor market, excluding memory, to increase by about 10% year over year, while foundry industry growth is now forecast to be mid to high teens %, noting that both are coming off the steep inventory correction and or base of 2023. I still believe that going with the likes of TSM and ASML for the future is a no-brainer. Of course, the price of the stock when you buy it, of course, that matters. But with the recent pullbacks, I think we're going to start to see quite some opportunities there. I'll do a separate video on that pretty soon. Now, looking at first Nvidia here, Nvidia is now at $762. So if you liked it at $960, you should be loving it right now under $800. This is on the daily, by the way, which you can see there is a gap here between $680 and $750 or so. The 200-day moving average sits at $603. RSI is getting pretty low, but not oversold yet. With regards to Intel, we're now under $35. We are oversold on the daily. We're also starting to fill that gap here from back in late 2023. So things are getting quite interesting here with regards to Intel. Then with regards to AMD, remember we made a video about AMD not so long ago. It was down 25% from its highs. It's now down 35% from its high and extremely close to the 200-day moving average. It's also now down on the daily. It is oversold. In my opinion, this is also a very, very interesting pick right now going into this earnings season. Of course, right now, before the earnings report, you're basically placing a bet. And after the earnings report and call, you will make your decision based on fresh information. But I mean, if we see a little rebound next week above that 200-day moving average, could be a pretty good pick. Up next is ARM. It's now at $87.19, starting to fill that gap here from back in February of this year. It's a gap that started at $77 or so. So we're definitely not that far away from filling that gap. On the daily, we are already oversold. So in my opinion, I do expect some buying action sometime soon. And of course, with ARM, just like with every other company, in the next coming weeks, you're going to get way more information, which means that pricing-wise of this stock is going to be affected. If one is now trading at 30 times earnings, a week or two from now, suddenly we're going to get, I don't know, raised guidance, lower guidance. That metric will change. Stock will get affected positively or negatively. But I do prefer going into the earnings season with already a small correction, meaning risk reward wise, you're entering that earnings season in a much better, let's say, environment. If you're looking to buy, of course. If you're looking to sell, then of course, yeah, that's not the greatest right now. Last one right now is Micron Technology. Remember Micron, the latest earnings report that we've got for them, huge jump. And now we basically gave away all the gains from after that earnings report. We're now back to where we were after that gap up, which is also now the 50-day moving average. The 200-day moving average is much lower at $85. RSI is obviously in a very, very negative trend, but not oversold. Again, with Micron, I still think that their upcycle is only starting right now. So that will be it for this video. Are you looking to buy any semiconductor stocks? Have you been buying maybe in the last couple of days? Let me know down in the comment section below. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye-bye.